Hello and welcome to the first Advisor Fit Finance sessions of the year. You've all managed to survive 2020 and now you get another episode of our joyous ramblings for going into the new year. And given markets have been closed, one of the things that has been happening whilst they've been closed is Bitcoin has gone through the roof in terms of valuation. Chaps, what are your views on that? If we start with Henry.
Well, they have, haven't they? So last time I looked at Bitcoin, it was at $3,000 a coin, and this morning it seemed to be at $34 a coin. It's not strictly true; it wasn't the last time I looked, but it's gone on a huge bull run, especially in the last 2 or 3 months, and I think even just over Christmas it hit 20, didn't it? So it's in the last 2 or 3 weeks it's almost doubled in price. It's a huge, I think it's a huge story, and my feeling is that actually it is something that's going to play out over the course of the next few years. And I do think some big companies have now decided to transfer their balance books into Bitcoins. Some big investors are saying it's going to hit extraordinary valuations. Well, I've seen $500,000 a coin in one report. But quite widely, people are thinking that it might get up to $50,000 or $100,000 a coin. So there's potential of a huge amount of growth there. It's also hugely volatile, and it bounces up and down and goes all over the shop. And I must say, I mean, if you'd asked me 6 months ago, my feeling behind it remains the same today, and I think this is why you see so much volatility in it. It's an unusual investment. There's no yield to it. There's actually no Bitcoin that one can lay your hands on. So in a sense, it's even more of an unusual investment, say, than gold, which gold obviously creates no yield, but at least you can get a nice bit of gold and you can rub it. And Tim was showing us earlier, Father Christmas even gave him a little bit in his Christmas stocking, so he must have been an extra special good boy last year.
Absolutely.
Tim, I think you were saying that actually regulation is a big issue in Bitcoin as well, not just the volatility of the asset itself, but all of sort of the rules and regulations surrounding it as well.
Yeah, I think towards the end of last year, I think generally speaking, Bitcoin has sort of become a bit of a taxi conversation subject, isn't it? Most people have heard about it. They know it's this new style of investing or new type of investment, which is based on blockchain technology and has done all sorts of weird and wonderful things. And so everybody's, not everybody, but a lot of people are wanting to jump on the bandwagon. But yeah, towards the back end of last year, I believe all derivative products. So effectively, for those that don't know what that is, that's the way in which you can get access to the movements in Bitcoin prices, but without actually laying out £10,000 for one coin, get access to it by only putting down a much smaller amount of money. And those products have been banned for retail traders. Therefore, clearly, to actually get hold of this sort of investment, you've got to be rooting out the full cost of the coin, or if not a proportion of the coin, to get access to the movements. But I think it's, we still, whether or not it's going to be Bitcoin itself, or not, we still need to be mindful of what it's a product of, and that is the blockchain technology that's it's built upon, and that is being or seems to be spreading as a new way of going about things. I think in the last couple of Fed reports, I've seen mentioning of a digital USD many times now. It's been mentioned a good few times. I think a few other banks, BOJ and BOE, I think Japan and England have mentioned similar sorts of things. So this transition to this digital way of moving currency around is definitely coming about. As I say, whether or not it's a good thing, but I don't think that's still something that we can't really ignore.
Yeah, and I think that's it. It's whether you're investing or speculating. I think if you're waiting on the greater field, doesn't mean it won't go up or won't go down. But yeah, it's highly volatile, and I think as part of a diversified portfolio, if you want to put a small allocation in there and it's money you can afford to lose, then fair enough. I think if you're trying to generate returns to it, then like Henry said, if there's no yield, it's not really an investment. If it doesn't generate money, it's just speculating on the price of anything, just like a currency is. So I think a lot of people are using it as a new store of value, but I think you're right. I think currencies will move to a more digitized format. But there's other ways you can maybe invest in that kind of theme through companies like PayPal or Stripe or other sort of payment technologies, Visa, MasterCard, that actually generate cash flows and maybe offer some diversification. So yeah, it's a great story, and yeah, if you make a huge win on it, that's great. But I think equally, if you put all your eggs in Bitcoin, then there's a lot of momentum. I think if you've got lots of sort of day traders and people getting cash over Christmas, that following into things like that can definitely build bubbles. I think that's one of the big risks I see.
Yeah, definitely. I saw something the other day which made me laugh, where it was, while sort of fundamental analysis on stocks and bonds is based off balance sheets, financial ratios, all this sort of highly mathematical stuff. Bitcoin fundamental analysis is just, oh, I think it's going to go to 40, or I think it's going to go to 50. Why? It's just, I just think it's going to go to 50. It's like that. That's kind of what you're investing off the back of for a large part. So just be wary of that if you're considering it.
Yeah, there's no history to it though, is there? So there's no way you can really carefully analyze it. It's all got to be a guess. And when you say that it might go to, $50,000, well, that it might be the case, but I don't think there's any way that you can ever put a reason as to why it might go that far, because fundamentally the reason that it will go up is just because of demand for it. I mean, as demand increases and supply remains constant, it'll go up. But if all of a sudden PayPal says they're not going to accept Bitcoin as payment, and the SEC clamps down on it and makes it impossible to use, then presumably that valuation evaporates overnight.
Yeah, and I think you look at the Eurozone, and the reason countries want their own currencies to be able to manipulate their exchange rate in a free floating way, to be able to make their goods or services more expensive and compete with different countries or adjust accordingly. And I think if you look how that struggles for, say, Greece and Germany being two diametrically opposed different states of where they are in the economy and how they operate. I think if you had a worldwide currency like Bitcoin, then that just becomes even harder. And I think that's where the technology will probably be used, but replicated in a more probably uniform way that we see currencies being used, because they're all digitized now anyway. There's no gold standard or anything, but I think the technology and the ability to pay in that way is probably going to be the story going forward. But yeah, in the meantime, could go to 100,000. I think there was one guy who said he was going to eat his own organ if he or something like that, if Bitcoin didn't reach $1 million by the 1st of January this year. So he was obviously very bullish on the matter, but I think yeah, it's very up and down, isn't it?
That wasn't the same guy that was shorting Tesla, by the way, was it?
He's not having a good month. But yeah, I think let us know your views on Bitcoin, whether you think it's the future, whether you think it's going up or down, or whether you would rather put all your money under the mattress. Until then, thanks for listening, and we'll see you soon.